The investors are happy to invest the money there because it's lower risk for them. You're managing the risk because it's more assets. And the more assets in the fund, the lower the risk. Okay, so I call it cracking the real estate fund code, because the difference between a syndication and a fund is a syndication is one property. You're going to raise money to buy this storage facility or this hotel or whatever. So it's one syndication, one deal, and it's usually an equity deal whereby the investors give you money and you tell them, I'm going to give you 5% cash flow. And when we sell the property within 5 years, anticipated period of time, we're going to give you 65 or 70% of the upside gain. And then that's the only thing. So you raise money, you got to close in 90 days. That's it. That fund is closed. The people who are in it are in it. No more people coming in. Anybody coming out, you have the disclaimers in the private placement memorandum that tells the investors you're coming in. The duration is approximately 5 years. We anticipate to sell for this, all projected numbers and all that. So it's good, but it's one deal at a time. Then you have to go to an attorney, file another syndication costing you $20,000 to $30,000 at least, and then go to new investors and raise money, or existing ones in the previous fund, and say if they want to invest again, etc. Now, the real estate fund that I talk about, cracked the code. I cracked the code because I realized I can set up a real estate fund whereby I can raise money for this storage facility, for this hotel build out, for this rehab luxury home in San Francisco, for this mixed use in Puerto Rico, for these retail single tenant, and all this sits in a real estate fund. It's like buying a stock or buying a mutual fund. The only difference is buying into a real estate fund that's a private fund. You have huge control over how to deploy the capital. The investors are happy to invest the money there because it's lower risk for them. You're managing the risk because it's more assets. And the more assets in the fund, the lower the risk.
Yeah,
Not
absolutely.
that there is no risk. I'm sorry, go ahead.
Oh, no, I'm agreeing with you. I agree with that.
Yes, sir. Not that there is no risk. There is always risk. And you can never say this is guaranteed or we're so good there is no risk. None of that stuff. You have to fully disclose everything. There is risk. We're managing the risk. And the way we manage the risk is by diversifying into different assets, different markets, different type of assets, different cash flow and rehab and cash outs, developments like what you want to do, Anthony. So now you're able to say we're doing developments, we're doing some, you have the assisted living, and you have many assets that you can put in there. So then the way I said cracking the code is I said, instead of going with equity funds, I suggest you go with a debt fund where people give you money. So much, let's say 25,000 to 249,000, they get paid 6%, 250,000 and higher, they get paid 8%. Then you can make some exceptions. There is a way to write the private placement memorandum that is extremely useful for you as the real estate fund manager, gives you flexibility. If all of a sudden you want to pay somebody out, you can pay them out. SEC is not going to come and say, how come you single this person out and pay? You already disclosed that I have the right to refuse anybody from the fund. The guy went and badmouthed me. The person he has a wedding with his daughter. He wants the money out. A lot more flexibility, a lot less cost, and you do a good job. They're happy they got paid with less risk, less fluctuations, and you have all this upside. And you're able to cash them out sooner than 5 years or 7 years like other funds get stuck. So that's and you're able to take another investor's money, and it's like you refinance. This person came in at lower cost for you, you can cash out somebody at higher cost. And that is not Ponzi, that is actually just a refi that's readjusting the fund. And we include the training, how to pitch, how to write it. And I work with you as a new person coming in and with the attorney to have it filed for you. So it's totally turnkey, done for you type of thing.